Power Grid Corporation of India, which generates close to 97% of its revenues from the regulated power transmission business, continues to grow moderately in spite of the crisis in the economy caused by COVID-19. In our Ideas for Profit today, I'll discuss the key earnings fine print and the outlook on the company going forward. Well, even in the worst affected June quarter, the company was able to post a decent 3% year-on-year growth in the revenues that was led by 5% growth in the transmission segment, which actually accounts for the 97% of the total revenues. Now, the company's power transmission business was not much affected considering the essential services nature of the business. Now, the only pressure was on account of the execution of newer projects which actually got delayed. Now, in the June quarter, the company did capitalization of 1200 crore rupees, which was lower by 16% on a year-on-year basis. Now, its other segments like consultancy and telecom, they were really impacted significantly, but considering their contribution is low in the overall revenues, the overall impact was not very material. Now, marginal growth in revenues could not absorb the higher operating costs. The company's EBITDA margins dropped by 187 basis points to 82.2%. That was due to the higher expenditures. Now, the company also extended one-time rebate to the discoms worth 1070 crore rupees that really impacted the overall profitability as well. Further, higher fixed costs such as depreciation and interest costs related to the ongoing projects did hit the overall profitability, and the company reported an 18% year-on-year drop in the consolidated net profit in Q1. Now, the company could not incur sufficient Capex, and also thus assets which are commissioned and earn regulated returns could not be added thereof. However, this will be recouped in the rest of the quarters of the current fiscal year. For instance, this year the management has suggested a Capex of about 10,500 crore rupees and capitalization of assets worth 20 to 25,000 crore rupees. Now, besides this, it is expected that other segments such as telecom and consultancy would also return to normalcy, and margins will also be restored in the coming quarters. Also, we expect a marginal growth of about 4 to 5% in revenues this year, but in the next fiscal year, the company is expected to rebound sharply and should do well, and the Capex and execution piling up also in the next year. Now, Power Grid is among the very few stocks that has growth visibility and strong balance sheet, and yet is trading at cheap valuations. At the current market price, if you see, it is trading at 7 times its FY22 estimated earnings and offers a good dividend yield of close to 6% as well. So, we do think that this is quite attractive in the light of the reasonable earnings visibility over the next 2 years, strong balance sheet, non-cyclical business model, also good opportunities in the transmission as well as the dominant position that it has. So, keeping that in mind, investors could actually look at adding the stock on dips or accumulating it for the long term.